What exactly is going on in these markets right now? 1 minute the DOJ is investigating Nvidia, then the company itself comes out and says, that's news to us, first we've heard. In today's video, we take a look at the dark pool activity, the big flows that are happening in the markets, and the gap fills that are starting to appear in some of the major market indices. Will we go a little bit lower before finding some buying pressure on the S&P? Today, we'll discuss it together. But possibly more important than any of this is the sneaky uninversion of the yield curve. Often considered the recession warning, it's happening right now in front of our eyes, but not that many people are talking about it. Let's go through stocks, commodities, and cryptos for the days ahead. It's going to be a good one. I'll see you on the other side. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. If it's your first time here, then remember to subscribe and smash that like button if you love markets like we do. But we'll get into the first story before going through some data and flows, because of course, Nvidia is the focus. And it looks like Pelosi, a longtime hodler of the old Nvidia stock, hasn't sold her stock, contrary to what we've been hearing on some resources. Now, this brings us to the big story because, of course, we saw Bloomberg and many others, and even here on the channel, we talked about how the DOJ subpoena supposedly coming on for antitrust on Nvidia was one of the major reasons that we saw a massive flash sell. In fact, it was the size of around $300 billion almost on the stock itself, almost sent it into an instantaneous bear market, and of course dropped 1 trillion across the entire stock market as a whole. Then, less than 24 hours later, Nvidia says it didn't receive an antitrust subpoena from the DOJ. Wow, this is a huge storyline that continues to unfold at the time of this recording. And it'll be interesting to see whether we bounce off this key technical zone that we'll go through on Nvidia, because we know the 105, 106 is a major level for the bulls to reclaim potential dominance in the stock. Speaking of the stock itself, I thought this was a good share here from Seth Golden, basically just showing that JP Morgan still love the old Nvidia, and they've been doing some correlations here. And you'll notice that common one you may have seen, which is Nvidia versus Cisco. I guess the forward PEs, you'll notice we're sitting just underneath 40 at the time of this recording. But overall, look at what Cisco did in terms of forward PEs. Look also at the projections in terms of growth, and of course, how the stock price has currently been in line with the forward EPS. So really, as we know, it's kind of fairly valued at the moment, if not slightly undervalued based on that DOJ news when it comes to Nvidia, if it can keep up what Wall Street demands of this stock, which is almost perfection, but it's been managing to do it. A bad first day of the month doesn't mean that the rest of the month is bad. We all know that Tuesday was a shocker. It sold off with possibly just the DOJ news plus some options flows. But when you have a bad day like that, the rest of the month tends to be bullish. 72.4% of the time, according to Carlson, it is bullish. And there are some other interesting reads here, such as reading off the VIX. So when it comes to the massive jump in the volatility of the VIX, so that's the VVIX, historically that is a significant signal given that the VVIX was going wild while the S&P was kind of holding steady. In fact, if you look at the VIX and what happens usually a few days out from this, when the VIX spikes the way it has, often we will see a fairly decent drop when it comes to what happens to the VIX after this point. So that may have been all we get in terms of the major kind of meltdown in the markets. And it kind of seems clear why that could be. If this DOJ news, I mean, if it's not real, that could be one of the massive reasons. The other reason that the market probably sold off was there were too many bulls. Let's be real. It went from being kind of more bearish to 50, almost 1.2%, almost 52% at one point there, with bulls everywhere, and everyone kind of starting to pick sides. I would expect, and we will give you an update on this on our Friday video, that the new AAII reports and other sentiment reports out there in the markets have a big switch here, maybe 10% down on the bull end and way more people on the bear end, especially considered the real issues that we start to see in the markets on Tuesday. This is another chart that's starting to float around to do with reinflation. I think it's an important one we'll discuss again in the future. We all know that central banks are now planning on doing rate cuts. We also know that it's getting priced in that the central bank, being the Fed, is going to cut 50 basis points. I don't believe they will cut 50 basis points, but the market is now saying it's more likely than not we're going to get a 50 basis point cut in September. Well, that's interesting because, of course, if we start a cutting cycle and we haven't actually killed inflation, I'd be interested to know what your comments are down below. Whether we have killed inflation, then we could see a similar kind of reinflation cycle to the 1970s. This is an amazing overlay, and it really shows you that we're following at this stage a similar time and could be making the same mistake. It brings us to the idea of whether we're in a recession now or whether we're going to be one in the future. Goldman Sachs believes it's only 20% chance of a recession over the next 12 months, pretty in line with normal kind of reads, as you can see here. And the market itself is starting to freak out a bit more, saying that 38% chance of a recession over the next 12 months. Remember, when everyone thinks it's a recession, usually it isn't. I'm looking for everyone to celebrate a soft landing narrative over the next coming months. And when that starts to happen, well, we'll be, of course, terrified. We want to be doing that exact opposite of everybody when they celebrate the soft landing, whether that's in 6 months or 12 months or even 18 months. Of course, we'll be making daily shows and going through it together. The NASDAQ 100 and S&P both show pretty good cases for CTAs to be, of course, starting to buy back into this dip. So again, that's going to be a bit of a headwind in terms of a good thing for the markets when it comes to what's happening next. And we know the global liquidity as well is on the uptick, which is again good for markets that are trying to buy up. Also, remember bull market behavior. Just a few days ago before we started to sell off, we had one of the best breadth reads we've had in a while, and we continue to see strong signs from the economy overall. Also, when we have good runs from January to September, we do tend to have very good runs for the rest of the year. Never forget that structure is incredibly important leading into events. And although, of course, it could drop off like a cliff, we know that, of course, in US elections, that tends to look a little bit more sideways down until the election itself. And we know that volatility is set to spike into the election. It's not necessarily a super negative thing over the next 3, 6, and 12 months. We are looking for other internal signs in the markets to be weak. One of those is going to be unemployment. This Friday is non-farm payrolls. Be paying attention. These are the major times in New York time when you want to be paying attention to it. And of course, when we do get a rate cut in September, which the Fed has already told us is happening, it's going to come down to this chart here. Will we follow a non-recessionary structure, or are we going to follow a recessionary structure? Something where the market says, you know what, actually it's worse than we think. This next kind of 3 months in particular will be one of the most important for our investment kind of period over the next 12 months. And more importantly, it could be one of these points that's an inflection point to a real recession coming. We also know the rate at cuts will matter. The last 2 times we saw 50 basis point quick cuts, we ended up going into a recession and, of course, saw major market sell-offs. We don't always see major market sell-offs come into these markets. September, well known to be negative, often has kind of crappy start, and in particular, the back half is not good. But you've got to remember the first half is actually slightly deemed to be positive when you look at just the last kind of 20, 30 years, and the back end is really where the issues start to appear right after the Federal Reserve is slated to do the rate cut. Let's now take a look at a couple of dark pool transactions before we jump into the charts. First up, Tesla long ETFs. You'll notice that Tesla went up. We talked about positive gamma on Tesla coming back in, and this stock, whether it's the AI kind of mention of robot in a cryptic tweet by Elon or whatever, somebody was buying the other day. And we, of course, were more bullish on this particular stock. We talked about it over on X. We actually said that Tesla was potentially entering positive gamma on Tuesday, and it certainly has done so when it comes to the Wednesday action. We also have a couple of other interesting transactions, some big dark pools going through on Bull 3X funds for the S&P. This kind of shows you that someone's trying to buy the dip. And again, someone is making some large moves here on SPXL. You can see that it's all around this current price. And what I usually look for when it comes to this is the market maybe drops a little bit further, because remember, they don't get perfect price, and then it reclaims that area. And as you see that V, as you see the turn point, and you got these big transactions, it can strengthen your confidence that someone else is with you in that move. Speaking of some other big transactions, looks like someone took some profit on treasuries. You can see here a large transaction coming off the top. And just a quick reminder that gold is now outperforming the S&P, which again is another signal of what we call late cycle investing, which is something we've been talking about here on the channel. If we have a look at utilities, solar, clean energy, it was an interesting day. It wasn't really heavy sell-off in the semiconductors, more of a consolidation. And a lot of the more defensive markets were up through the session. If we go to 5 days, utilities is number 1, financials is number 3. And again, this is not a sign of a broad-based asset sell-off. It's a sign of particular sectors getting beaten down. And that DOJ news, I don't think was positive for any of those markets. When we look at the S&P itself, it tried to get to a new low. It is probably at a new low when it comes to the time of this recording. And the market seems to be trying to get into that gap fill and options level. Do remember, when we look at the daily here, we've got the advanced decline line going sideways, which is, again, not a super negative sign. This is the pullback that I'd like to see. I think a lot of us wanted to see it back in this gap fill, at least gap fill 1. It makes sense. That was a massive move to the upside only a few weeks ago. Here we are, and we've got the options high and the low and all of the kind of stuff we talked about in our previous video. Definitely check that out. So we're basically around support, but I want to talk options because I think this is the most important level. Take a look here at the 5510, 5500 put when it comes to the next day. So Thursday into Friday, we have heaps and heaps of puts at 2 strikes. In particular, we've got a lot sitting around 5500 for Thursday, and for Friday, we have 5460, 5450. Sound familiar? Yeah, that's the gap fill level. So basically, we have a put wall sitting right on the gap fill level. I think no surprises there that we're starting to see a bit of options manipulation potentially here. And these may act to stabilize the markets at these levels. Remember, we are in what we call a negative gamma situation now, where if we lose these levels during the session, it can create a flow-on hedging effect. But it does look like if we do start to sell, 5450, 5460 should be able to hold up, at least based on the options. When we look through the rest of the market, you can kind of again see why Tesla is starting to rally here. It's at 219.4. We know above 215 is a big deal because we're in this case, positive gamma. So the markets are actually showing quite a lot of strength. A few people stacking into 220. We take 220, again, it could have that real flow-on effect. And this is important because when you look at the next expiration of the next week, we've also got quite a lot of calls coming through at 220. So if the stock continues to strive higher and higher, it can have that flow-on and follow-on effect. With Nvidia, it seems to be that puts are stacking all around the 105, 106, 103, and 100 zone. Again, acting as some level of support here in the markets. We're at a neutral kind of level here where the GEX is kind of more still towards the negative side, but it could be held up. You can see 115 being the kind of top call wall, and the markets might want to stabilize here. What we saw was a 110 getting crushed back down, and I'd be interested to see how this DOJ kind of misinformation ends up playing out on the stock. This will be a story that we'll want to watch, and you'll be looking for the bids. When it comes to consumer discretionary versus staples and these lead indicators that we use here all on the channel, make sure to subscribe if you've never seen these before because these are super lead indicators. Again, this chart is suggesting the market is turning towards that late cycle defensive action. Tesla, good low end price action, series of higher highs and higher lows suggests that maybe it could go forward a little bit more. And I'm looking for Tesla into 232. So can we get to 232, 220? Getting past that would be a fairly big deal. Let's move over now to some commodities. US oil dropping down to 69.50, hitting into these lows, finding a little bit of buy pressure. It's probably a bit early to tell whether oil has found any real buyers. You'll notice it got this instant buy yesterday, hit some kind of 2-hour 20 moving averages, found it again. I think we need more structure. So for now, oil remains kind of in a bearish trend. The US dollar also started to show some weakness. So notice here it broke underneath our 101.46, and this now opens up rallies on the dollar to be met by sell demand. So I think if we get back to something like a 106, I could see shorters and scalpers and day traders starting to turn bad on the dollar. So certainly the dollar was one of the larger kind of more, I guess you would say, replicable trades that happened over the last 24 hours. Movement down certainly is there. If the dollar goes down, gold may go up. It's showing a tweezer, but still probably too early to call that it's found buying pressure on this daily 20. You'll notice 2 big rejection wicks, no breach of the 2508. So still looking for the 2508 to go up. Meanwhile, silver did very, very well. So silver bounced off our exact zone, Just shows you why we have these kind of perfect, well, not perfect, but certainly very good zones in the markets. We know there was positions there. It looks like the street is trying to support that level, and it's come back up to what a scalper would take profit at, about 28.40. So a scalper that buys here is going to take profit around this area here off the double bottom. Certainly silver's not out of the problems yet. Needs to start reclaiming things like 28.80. If it can do that, that would be a much better sign for this particular commodity. Let's move over to copper. Weak. That's all I can say. Watching iron ore still, watching copper still. No signs of metal recovery. And we will be looking for that. As we said, we already mentioned Tesla, but let's move over to Nvidia. So Nvidia here, 106, 105. This was the level that I expected to bounce off. We did get it. I'm interested to see what the DOJ news does. I'm assuming that's actually going to spike it up. So we should be able to see Nvidia get a little bit more bullish. But I would like to see it above and reclaim 113.50 now. That would be a huge deal, obviously rejecting all the shorts that came in over the last 24 hours. Anywhere between this 105 and 100, as we saw with the puts, seems to be quite, I guess you would say, options related, quite supportive of price in terms of buying. So Nvidia right around that key zone, the level we looked at for quite some time. HSI, Chinese stock market, just kind of hodling around, doing nothing much. We are going to probably see some big news come out of China over the next month. Will we find buyers here? Well, we'll be watching, but no real bid coming in on this long leg doji. Still kind of stuck between that zone. We'll keep looking at it. Semiconductors, of course, did find the bounce at the 61.8. This is an important zone, just like for Nvidia. So we're looking for buyers to recommit to that particular sector at around this point. US 30, nothing much to report. Obviously, coming down to the daily 20 moving average and sitting there. RSP, so the equal weighted market, it was a little bit weaker through the session, showing that the market itself was kind of stagnant, and that makes sense. And again, it's still breaching to the upside, so still making a series of significant higher highs and higher lows. The US 2K, though, didn't find bid yet. I would like to see the Russell find bid, looking for structure, guys. Just nothing there. US 500 still has one of the best charts out there. And of course, the Qs moved underneath the gap, found a little bit of buying pressure through the session, were unable to reclaim the gap, and they're sitting around here. There's still a distinct possibility that we could move lower on the Qs, fill the second gap, but at around 450, I'd expect buyers to come back in. So again, the NASDAQ, bit hard to call here whether we've found significant pressure buying yet. It is quite weak. We're at a key level, a little bit underneath it, which at this stage signifies that we could keep going lower. Of course, I'd be looking at the US 500 and the structure, and particularly those puts, because remember, if we drop the extra 70 points, get down to the first gap fill, well, that could actually be around 450 on the Qs. So I like to see synergies in markets, and I'm sure all of us do. We all want to be looking at those levels. Speaking of synergies, not much going on in the Bitcoin world. We know it was oversold. We can see here I've got a little apple. And basically what this is showing us is that this market is quite heavily sold off. It's probably too heavily sold off, but still too early to tell. For the bulls to reclaim this area, they're going to need to get it through 60K. That's the first key sign. And do remember, Bitcoin's still in an overall downward trend. Until it gets through 68K, you can't really be confident it's making a new all-time high, and that's going to start ramping really heavily. Also, Bitcoin has horrendous Septembers. It's well known that October is the most bullish month of the year for Bitcoin. More on that in an upcoming video soon. Sorry for the lateness today, guys. It was a little bit hard for me to get it out, but overall, we always do production here every day on the channel for the show. I very much appreciate your time and hope you have a good rest of the week. ISM PMI on Thursday, September the 5th, and then we've got non-farm payrolls at 8:30 a.m. on Friday the 6th. So much information going out. Make sure to follow us over on X, because we do post there as well daily to update you on any major news and charts that we're seeing. And at this point, of course, the story is now all importantly on non-farm payrolls for Friday, but the uninversion of yield curve, of course, which we'll go through in our next video, because the uninversion of yield curve is not an instantaneous crash event. And more importantly than that, what is going on with the Nvidia news? So you've got to just pay attention right now to everything in the markets. And remember, leave your opinion on the side, watch the price action, watch the flows. We're coming into some big put support. Let's see if they can hold it up. Bye for now.